Hello, yes, my name is Philip Anderson. I run a business called Economic Indicator Services. Essentially, with this business, I study economic cycles. I have found in my studies that the economic cycles repeat. Once you can see this repetition, it becomes very easy to forecast future economic behaviour. The two cycles that I'll be talking about today, the real estate cycle averages about 18 years. This has been going on since about 1800 in the United States and certainly in the UK as well. The second cycle that I mentioned is the so-called commodity price cycle, which takes its name from Nikolai Kondratiev, the original person that saw some of the statistics for this in the 1920s. He found that commodities have a rough 60-year cycle, 30 years of prices up, 30 years of prices down. And so in this conference we'll be having a look at that cycle, and I'll be showing ways that the businesses here can take advantage of that cycle going forward.
Hello, my name is Malcolm Buchholz. I've made the trip here from Canada to attend the Objective Capital Resource Conference. I just heard a most intriguing presentation by Philip Anderson with Economic Indicator Services. Most people think the stock market and the commodity market is something where you put your money in, you automatically get a return many years down the road. What people fail to realize is that markets actually move in very distinct cycles. These cycles have been repeated year after year after year and can in fact be traced back to the early 1900s. So if you are involved in the stock market or the commodity market, don't lose sight of the fact that these markets do move in cycles. Don't get trapped. Don't get on the wrong side of one of these cycles. And for more information, please be sure to follow Philip Anderson at Economic Indicator Services. You will be impressed.
Well, good morning, everyone. I'm never sure how to start these talks of mine. I'm sure a lot of people are had enough of economists because, let's face it, very few people saw the downturn coming, least of all economists. Contrary to most economists that might do something a little bit depressive, I'm the exact opposite. I think you'll hear quite an upbeat story today. I may actually also be a little bit controversial. I'm a bit nervous about some of what I might show you, really, because it's going to be a little bit different. I think the best thing to do is to just get started, and we'll see how we go from there.